up? Welcome to my YouTube channel. In this video, I'll explain to you what is an IPO, the process of being an IPO, and how it all relates to Ariana Grande. Stay tuned. Alright, I know what you're thinking. No, I did not buy this shirt just to make this video. I actually already had it. I'm a fan. I've seen Ari twice now. Once at Coachella and another time in concert, which if you stay till the end of this video, you'll actually see a footage. So that's how I'm gonna be able to explain to you guys how an IPO is kind of like Ariana Grande. Alright, just so we're on the same page, an IPO is an initial public offering. It's basically when a private company chooses to list itself on the public market, such as the New York Stock Exchange, for example. And a company usually decides to do this to raise capital. Now, there's two ways you can raise capital. A, through debt. That's like when you borrow money from a bank. Or B, through equity. That's basically when you sell shares. Let's take a look at a most recent IPO, Snowflake, which I did a full video analysis on, which you can check out. So if you look in the bottom where it says lead book runner, you're gonna see Goldman Sachs, JP Morgan, Citigroup. Those are your underwriters. They're essentially the banks that's taking on the risk. They are the banks that determine the IPO value. And essentially, just like Ariana has a talent manager, they are the talent managers for IPOs. They go out and garner interest and say, hey, we have a hot IPO coming out. It's gonna be huge. It's gonna be the biggest star. You have to invest right now. So those people that they were able to garner interest from, such as Berkshire Hathaway or Salesforce, are what you consider your initial investors. You can think as those initial investors as the people on the box seats at the concerts. If you look on top, you're gonna see offering size. That's 28 million shares. It's pretty much the amount of outstanding shares available, and right underneath it you see over allotment 15%. What that means is the bank reserved the right to increase the amount of shares they want to sell. So 15% of 28 million is about 4.2 million, putting it at a 32 million shares available to sell. Now, if you look at the filing range, you're gonna see a number between 100 and 110. Snowflake actually ended up being 120, and a lot of people thought they were gonna get the stock at 120. Guys, that is not how IPO works. The 120 number was actually just pre-sale tickets. So those number, that 120, was for your institutional investors. So think mutual fund, think big bank. It's kind of like pre-sale. You know, the pre-sale is always the exclusive people, the people that had like an Amex card, for example, or the people that was part of the subscription list for a particular artist, not everyone else. And anybody that has ever purchased concert ticket knows if you didn't get on pre-sale, you're about to pay aftermarket price. The day of the Snowflake IPO, a lot of people couldn't get in. The reason why they couldn't get in is because the line was being held for those institutional investors to get their shares first at 120. And by the time they were done getting their shares at 120, there was so much demand for Snowflake stock that by the time the regular folks like you and me got in, it was, well, not me, but the time the regular folks, like the people that bought the IPO on the day of, got in, it was actually at 250. So there are three tiers to buying IPOs. You have your initial investors, Berkshire Hathaway, Salesforce. You have your pre-sales, which is your institutional investors, mutual fund, big banks. And then last but not least, you have the nosebleed section. And that is you, my friend. How do you get an IPO for a good price? Well, let's bring back our girl Ari. I actually ended up buying her concert tickets for $40. And the funny thing is, when her tickets first came out, you couldn't even get it for lower than $65. So how was I even able to get it for $40? Well, I waited and waited and waited. As a matter of fact, I waited till 7:30 the day of the show, when the show started at 8, to buy my tickets. Now, that might have seemed like I was living on the edge, but there was a method to my madness. I understand the concept of supply and demand. You see, I knew that anybody that was dying to go to the concert have already bought their ticket and probably at the arena by then. And anybody that still was holding on to a ticket to sell, at that point, had no choice but to sell at a loss to me. And that's pretty much the same with IPO stocks. If you look, you have a lockup period where it says early release starting after 90 days. What that means is those initial investors we talked about earlier, they cannot sell their shares before 90 days. But you know what happens at 90 days? They sell, and they sell to take their profits, and anybody that bought at the top of the market is going to be left holding the bag. At that point, there's going to be more supply than demand in the market, which is going to drive the stock price down. And the person that bought at the top of the market thinking the stock was going to go up and up and up, well, at that point, they really won't have any choice but to sell to you at a loss. Alright, that's it, you guys. This is the part where I say thank you for watching, and I'll see you in the next video. But in this instance, I think it makes more sense to live out with this.